Many investors will be familiar with the core satellite investment approach. Low-cost, broadly diversified ETFs can be an effective way to build out the core of your portfolio. But what about the satellite portion? Now, in this video, we'll discuss the power of thematic ETFs in your portfolio, how to identify structural trends, and some ETFs to consider. Thematic investing is a forward-looking investment approach that aims to capitalize on long-term megatrends. This style of investing is not bound by geography or sector classifications. Consider the growth of cyclical industries like healthcare, banks, and energy. These industries undergo expansion, peaks, recessions, and troughs before recovering and then repeating the cycle. These industries have short to medium-term cycles and tend to revert to the mean over the long term. Thematics, however, seek to take advantage of long-term structural change. This change is longer term than a business cycle, and companies benefiting from structural growth often have revenues that are less influenced by it. Drivers of structural themes usually involve disruptive technologies or changing demographics or consumer behavior. Here's a simple example of the differences between cyclical and structural growth businesses. Microsoft's revenue has grown steadily since 2001. Aside from some seasonality in quarterly earnings, very little has hampered Microsoft's revenue growth. Even major economic downturns like the GFC or COVID crisis didn't adversely affect revenue growth. Compare this to the revenue growth of ExxonMobil. Exxon's dependence on oil makes it a highly cyclical business model. This is reflected clearly in the revenue of the business. Microsoft is participating in new markets that are growing, such as enterprise computing, cloud, and gaming. The oil industry, however, has reached maturity, so revenues generally only grow when the economy as a whole grows. They also shrink when the economy as a whole shrinks. Here's how thematic investing can benefit you as an investor. Thematic exposures offer 3 benefits in the satellite portion of your portfolio. Firstly, they offer longer-term return potential above and beyond broader benchmarks. Innovative technology or products that meet the needs of a changing demographic naturally incur revenue growth. Performance then usually follows. The cost of this additional return is usually higher risk, as thematics can often be in the early stage of development, profit margins can be low, and bankruptcies are more frequent than the core allocation of a portfolio. This graph demonstrates a handful of our thematic ETFs and their risk-return characteristics compared to broad benchmarks. Returns are clearly stronger in these growth-oriented indices, but they come with a higher price volatility. This combination can work well as a small allocation in your portfolio as a satellite. You can benefit from potential gains without risking too much of your total portfolio. As an example, consider this hypothetical portfolio, comprising of an 88% allocation to low-cost, broad market exposures to equities and fixed income. A smaller allocation of 12% can then be allocated to a higher risk, satellite exposure, that offer the potential for outperformance. The second key benefit of using thematics in a portfolio is diversification. Again, due to paradigm shifts that thematics often represent, thematics often demonstrate low correlations to broad-based indices. This adds to the diversification of a portfolio overall. A third and perhaps less considered benefit involves how you use thematics in a portfolio. If you hold them as a satellite with the goal of holding for the long term, it is the case that timing the investment is less important. Getting timing right for cyclical investments is vital. Calling when oil prices have peaked or interest rates have troughed, for example, are fundamental to the investment process. However, for these long-term investment themes, entry and exit points are less important. Major technological shifts like smartphones, electricity, and cars are measured in decades, not years, and investors don't necessarily have to closely monitor these themes in order to achieve strong returns. Knowing the benefits of thematic investing, how do you know which to choose? How can you identify long-term trends and avoid fads? Here are 3 megatrend examples we believe are shaping the future: demographic change, technological innovation, and climate change. These megatrends often inform thematics like telemedicine, cybersecurity, and solar energy, for example. We believe that when selecting a thematic to invest in, revenue growth is key. Here's why. Take the Betashares Global Cybersecurity ETF Hack, for example. Forecasted revenue growth for Hack's index currently sits at 7.67%, whereas forecasted growth for the global MSCI index sat at 2.44%. Sticking to industries with high revenue growth proves there is an addressable market. Certain industries that offer promising technology without the ability to derive income from that technology can often be considered too embryonic to invest in. That is, the industry has not yet shown an ability to monetize. It's also worth keeping a wary eye out for thematics that appear to have erratic price movements. It's never been easier for investors to gain diversified, transparent, and cost-effective exposure to these major investment themes shaping our world with ETFs. We identify attractive thematic opportunities using the following framework. The themes must have longevity. Their existence and potential growth has to depend on a multi-decade structural change, like the advent of artificial machine learning, an aging population, or the world's approach to climate change. Second, the themes must have an investment universe. There must be listed stocks that are adequately exposed to the thematic for the ETF to be a true representation of the thematic. Finally, the thematic must have a proven ability to monetize. Companies operating in the thematic must have an addressable market and pricing power so they can make sales and eventual profit from the thematic. Our thematic ETFs apply a rules-based, passive, and pure play exposure to the thematic. They also aim to diversify against stock-specific risks by holding a basket of companies. Now, if you want to learn more about the thematic investment opportunities that we have identified and the ETFs we've introduced to the market that offer exposure to these trends, check out the link here. Thanks for watching.